What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Nicholas Fawcett, Senior Economist at the BlackRock Investment Institute, and this week we unpack why inflation pressures are here to stay. We think the Middle East conflict only piles onto inflationary pressures already bubbling under the surface. Higher yields are here to stay, in our view. That means long-term government bonds are no longer effective diversifiers against equity market declines. Prior to the Middle East conflict, markets ignored signs that inflation's downward trend had already stalled. Core services inflation remained stubbornly high. An aging population and immigration curbs make for a tight labour market. Add the AI-led capex boom and tariff-driven goods inflation, and it was clear to us that core inflation would stay hot. Markets have embraced this view. They are pricing out US rate cuts and expect the European Central Bank to raise interest rates this year instead of staying put. The big picture? We're in a world shaped by supply, where supply constraints are the main drivers of inflation. So central banks face a stark trade-off between reining in inflation or supporting economic growth. There's more pushing up on inflation too. Governments are rushing to invest in energy security and defense, and the costs of key AI inputs like semiconductors are rising as capacity lags demand. This is the backdrop facing the Federal Reserve and other major central banks as they meet this week. We're watching for any signs that policymakers are growing more concerned about persistent inflation, even if they choose not to respond to conflict-driven higher energy prices. All this doesn't bode well for government bonds, which have struggled to offset equity declines throughout the Middle East conflict. This underscores what we call a diversification mirage in our global outlook. We think it's a core feature of the post-pandemic world. Here's our market take. We prefer stocks over bonds as we see persistent inflation pressures keeping interest rates higher for longer. We also eye thematic opportunities linked to AI. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you've enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This content is for informational purposes only and is not an offer or a solicitation. Reliance upon information in this material is at the sole discretion of the listener. In the UK and non-European Economic Area countries, this is authorised and regulated by the Financial Conduct Authority. In the European Economic Area, this is authorised and regulated by the Netherlands Authority for the Financial Markets. Reference to the names of each company mentioned in this communication is merely for explaining the investment strategy and should not be construed as investment advice or investment recommendation of those companies. For full disclosures, go to blackrock.com/corporate/compliance/bid-disclosures.